Welcome back to Tip TV Finance. My name's Charlie Burton. I've got an independent day trader with me today, Darren Mukin. Darren, welcome to the show.
Thank you.
Darren, let's get straight started. Tell us a little bit about yourself. What's your professional background before we go into your trading?
I work in the construction industry. Property developing is my main thing, so I work for myself doing that.
Yep.
So that's what I've done since I left university.
So that's quite something to get into straight from university. Yeah. How did you manage to do that? With a student with debts or anything? No.
Well, my parents were property developers. They were into it as well, so they got me started with my first couple of projects, and then from then on, just sort of added over the years. So that's my main source of income. And that
must give you a nice sort of lifestyle. In the I'm not talking about financially necessarily, but because it's not full on. It's not like you've got a 9 till 5 job or you're having to go to an employer's office every day.
No, that's exactly it. So it doesn't take my time every day. So it's more like part time. Some months I have no work to do at all because it's in between projects. So, and that's how I got into trading.
I want that job. I want that job. Yeah.
Yeah. So it's just keeping. That's why trading sort of came on board, because it uses making use of my capital, gaining some interest in my capital while I'm in between projects.
Brilliant. Okay. So there's a nice synergy between the two, and we do meet a lot of people who are property investors actually who want to trade, and we get traders who then want to invest into property. I've done that, and I'm useless at investing into property. Anything I ever buy just ends up going wrong. So Darren, how long ago did you actually get into trading? What was your first foray into trading?
Well, probably about 8-9 years ago did I actually start physically downloading charts and looking at charts on the computer screen. But going back into my university days, I was studying economics, mathematical economics. So I did sort of have a feel of the markets then, but not actually get into physical trading sort of later on.
Right. Okay. 2008. Oh, good timing. Was it?
Yeah, well, the crash was when property went a bit quiet. So
yes,
that's why I sort of started to look a little bit into trading a little bit more.
And it was huge volatility then. What were you looking at trading? Was it equities at that point?
No, it was always Forex.
Forex.
So I started off in Forex. Just started to look at some online courses. Paid for some. Got a little overview of what it's about. But it took years, for me to actually start putting good amounts of money into the platform. So
you had a little bit of education online with a few different companies.
Yeah.
Tell us a little bit more about those experiences.
They just taught you the basics, but I picked up bits and pieces, just your basic stuff, support and resistance, following the trend, how to manage your money, how to manage risk, trading psychology. So just little bits and pieces, even harmonic. Patterns trading is what I really got into. So I enjoyed that because I enjoy the mathematical side of trading from my background.
And have you continued with that using harmonics?
Yeah, I do. Right. Just as an aspect of trading. It's not. I use a confluence of things because that's what I think to have conviction in your trading, you need to find your own style and develop. So I've taken bits and pieces along the way and developed my own trading style. So not all the time, but just as.
So it forms part of your overall framework of trading. We're going to explore that in a short while, but let's just rewind a little bit first, because I always like to find out the juicy gossip from any trader and anything that's gone wrong over the years or anything like that. Tell us about some of those experiences that you might have had as an independent trader.
Well, there's many wrong trades that I've taken. I mean, the first few years I've lost, obviously thousands, not tens of thousands, fortunately.
Yeah.
But that was money that I was prepared to lose because I knew that the risks were involved, and I knew it would take years to learn to be able to be a profitable trader. I didn't have the pressure of it being my main source of income. So money I put into it, I just wanted to tick over, and I knew that years of experience it would take really to be able to manage the trades, but manage myself. So there wasn't one specific trade I could say that cost me big, but many.
Okay, so you mentioned this before actually. Yeah. So you just had a series or a period where, did you mention discipline? Was it a lack of discipline overall?
Yeah, discipline was a key thing, and I think that's taken me years. I'm still working on that now. But just not over leveraging, making sure your stops are in, not over trading is something I'm still sort of struggling with a little bit now.
So when you say over trading, is it just that urge to want to be in the market?
Yeah, like fear of missing out, FOMO trades.
Right. FOMO, like
it's a little expression. But Yeah, so I'm starting to journal my entries a lot more. I should have started it years ago, but I'm starting to journal my entries just to try and eliminate those FOMO trades a little bit more, because I find that about 70 to 80% of my losses are due to FOMO trades. But journaling is really helping me to try and knuckle it down and just make sure that I'm not.
So, I mean, this is really important stuff here, because keeping a trade journal, which is such a simple concept, and yet so many independent traders don't actually do it. What's the sort of information that you will put down into your journal then?
Well, just obviously open price, close price, take profit, loss. I've also just built something on Excel just to chart it. So I also list the emotions of the trade. So every trade that I take, I'd list what type of emotion was it, what time of day was it, and that will chart, how many of the losses are due to a certain type of emotion. If it's a FOMO trade, if it's an overtrading one, or perhaps over leveraged. Yeah. Which I don't really suffer from too much anymore. But yeah, so just a simple Excel package that basically maps that. But I think just logging in what your emotions are when you trade is also a very important thing. And I think that's where I'm finding where I'm identifying FOMO trades a little bit in my style that I need to eliminate.
That's really good of doing something like that. I've not seen anyone else, or no one else has told me that they actually put down what their emotion was at the time, which I think is really important. But one thing that a trader mentioned to me recently was that he actually grades his trades out of 10 when he takes the trades. So, and he's always looking for, it's got to be a 7 out of 10 or above, because you could argue, well, you should take every trade which is a 10 out of 10, but we know that the markets aren't perfect, so you can't always do that. Would that be something that you would look at?
Yeah, I haven't quite graded the trades, but what I do, I have a list of styles of trades, about 8 options. Is it a harmonic pattern trade? Is it support and resistance? Is it a breakout trade? And then I have my own sort of stages in the setup in my own mind, but I can list it in those categories. So it's important to do that, and I find like journaling your entries just helps to just it etches it in your mind. What you're doing. So it's just, so when you're taking a trade, you think, oh no, I'm gonna have to journal this if it's a FOMO trade, and think no, and it makes you, pull out of it, because you're going to journal it and look at it later at the end of the month and regret doing it. So it's just that little thing that does help, just making note of it. And
it means you're answerable to someone.
Exactly.
Even though it's only a journal, because a lot of people don't talk to their wives or partners about this sort of stuff. But by you actually putting it in black and white, you're answerable to yourself effectively.
Yeah, that's it.
And then when it's in black and white, it's quite scary when you look at it and think, oh God, I shouldn't have done that. I shouldn't have done that. So that's the big lesson I think we're taking from this interview is journalizing. Yeah, okay. So let's talk about some other stuff. So let's talk about your current style or styles. So you've talked about harmonics. What else do you incorporate into your trading?
Well, just the basics really. I try and keep it as simple as I can. Support and resistance is key. And just identifying whether the market's ranging or is it trending. That you like your basics. Look at the monthly chart, daily chart, weekly chart, things that you advocate. And momentum is one thing I've picked up from from learning from Easy Trader. That's another sort of string to my bow that I've added, because that is key. Looking at the MACD, looking at the angles of the moving averages and how it's all turning. But that's basically it. Try and keep it as simple as you can. Start fresh with my charts at the weekend, and then just put your support and resistance in. Have in mind of where your entries are at the beginning of the week, and that's pretty much it.
And so I know you're day trading, but you're also doing some swing trades as well. And that leads me on to another trade which I wanted to talk to you about, because I know you did this just specifically. You put £500 in an account in December purely to put a swing trade on gold, which was a trade that I was taking as well. And I took a nice percentage return out of this trade, but you did something like, 1,000% return or whatever it was. You took a £500 account into £5,000.
It was 8,000 actually.
Oh, okay. Sorry about that. So it was 8,000. That's a fantastic result. But let's talk about how you actually did it, because it's not as simple as just, you kept the leverage quite under control, didn't you? The risk, should I say?
Yeah, it was. I must say, it was a bit of a freak trade, because generally the market doesn't move as good like that often. But just started off small. My first entry was £1 a pip. As soon as that got to about 30-40 pips in profit, bought the stop loss to break even and added another £1 a pip, and then kept going. And then as the trade got bigger, I started adding £2 a pip on later entries, but kept managing my stops, bringing them up. So
what you were doing was bringing the trade to zero risk on your existing entries and then taking on new positions with a new amount of risk, but you weren't actually taking on more risk overall because the others were all protected.
Exactly. So it got to about £20 a pip, and then it was literally over a period of about a month and taken out about 1,000 pips off that trade.
Fantastic.
So it was my best trade ever.
And are you, I mean, that pyramiding type of trading, is that the way that you feel that you would continue to like to trade where you can?
Yeah,
it's not
definitely.
every opportunity, but
definitely. I find there's swing trading is probably the most profitable aspect of my trading. Day trading, I tend to get caught up in over trading a little bit, and FOMO trades, whereas swing trading, you can be a little bit more exact in your execution, and you can add to it, start really small and just build up your position and cut losses. I'm a firm believer in cutting losses when your losses are hanging around, they're not doing anything, momentum's waning, just come out of it. But when you're in profitable trades, just keep adding in and managing your risk and trailing your stops as well.
Darren, I think the two key things I've taken from this interview are journals, keeping the traded journals and emotional aspect of the journals as well, and building positions as well. Lots of people like to build positions when it's going against them, but forget to actually build positions when it's actually going in their direction. So, Darren, thanks ever so much for coming on SIP TV. We're out of time already. My name's Charlie Burton, and we'll be back after these breaks.